But for now, let's talk about a couple of earnings that we have. Indigo Paints, the company posted a revenue growth of nearly 8% in the first quarter on a year-on-year basis. It's a lot better than its competitors, the likes of Asian Paints, Kansai Nerolac. The industry actually saw a decline of about 1.5%, but this time around, as we've seen with Indigo Paints for the last many quarters, they've actually outpaced the industry. The reason why the stock is lower perhaps could be on account of lower net profit and lower margins as well. What's the way forward on everything? We have with us Hemant, who's the CMD of the company, joining in to discuss the company's earnings fine print. Thanks a lot, Mr. Jalan, for joining in. Always a pleasure speaking with you. You have spoken about, possible recovery in the second half of this year, wanting to do double-digit growth in this year itself. Just wanted to understand if you could give us a sense, a quantifiable sense of what were the price hikes that were taken in the second quarter so far, how has demand panned out, and what's the expected growth this year? I mean, a little more specific than just double digit.
Well, the overall price hikes that have been taken in two tranches, some has happened in the latter part of July and some is happening as we speak. So I think the combined effect of these price hikes is about 2% on a weighted average basis across the product portfolio. So this should help in improving gross margins for the entire industry. As you know, the last 2 quarters have been fairly muted for the paint industry in terms of top-line growth. We have seen a very good bounce back in the month of July. Of a kind that we have not witnessed in any single month during the last 7-8 months. Now, is this demand bounce back going to sustain itself going forward in the quarter? I really don't know, Mangalam. We have to keep our fingers crossed and wait and watch. These are headwinds that the entire consumer-facing sector is experiencing, and people are talking about green shoots of recovery. We'll have to wait for another couple of months before the verdict is out whether the demand has bounced back or not to its more normal levels.
All right. Would you be able to quantify the kind of growth that you saw in July over previous July? You said it was the kind that you've never seen in a very long time. On the revenue as well.
It's been in the high teens in terms of percentage. But whether it will sustain in August or September is something that we have to wait and watch. We sincerely hope that it will improve further as we go forward, and that's all we can say at this point in time.
All right. Hi, Mr. Jalan. Good morning, and thanks a lot for joining in. Well, these price hikes will cushion the margins. So by how many basis points will it improve? And what about the EBITDA margins? Could you give us a sense in terms of how that shapes up?
So, as I said, the price hikes are approximately 2% across the board. So you could expect, on a Y-on-Y basis, margins to correct by, at least the gross margins to correct by roughly 2 percentage points, all other things being equal. As far as EBITDA margin is concerned, our EBITDA margin showed a marginal decline in Q1. That was more because we had significantly ramped up our sales force size in Q2 of last year. So coming off a low manpower cost base in Q1, the manpower costs were about 23 to 24% higher, and that certainly impacted the EBITDA margins. Had the top line growth been much healthier, let's say in the mid-teens or around 20%, all this would have got comfortably absorbed. But going forward, when we move into Q2, this aberration of increase in manpower cost will no longer be valid. And therefore, we expect healthy EBITDA margins coming back in Q2.
Well, along with that, you'll also have, the leveraging of ad spends. Even as your ad spends have remained almost the same at an absolute level, if not grown, as a proportion of sales, they've come down. Do you have any, inkling on what sort of band does it settle in? I mean, it's a wide range for the entire industry. The leader has about 2 to 3%. Then there are people 4 to 5%. Then the new entrants do about 20% as well. You're somewhere around 7-8%. Where does that settle for you?
7 to 8%. We'd expect a marginal decline year on year for the full year. It's difficult to judge this on a quarterly basis because the ad spends are not uniform throughout the year. So, typically June, July, August are low months of advertising. We had a high advertising during IPL season in April and May. And advertising will certainly come back with a bang in September and October before the festive season. But if you look at the whole year, then as a percentage, I think it should drop by maybe a percentage or something close to that. So we were at around 7.5%, 8% last year. Maybe we'll be closer to 7% this year as a percentage of top line. So that should also aid EBITDA margins for the full year.
All right, Mr. Jalan, before we let you go, I have to ask you about the market share. I recall the last time we chatted as well, you were very confident. You said that y'all have your place over there. Y'all will hold on and grow onto your market share. Now, post the entry of the Birlas, how do you see that the paint market dynamics have changed? And also from around 3%, where's your market share now?
No, it's very difficult to quantify these things on a quarter-on-quarter basis. Obviously, if top-line growth has been outpacing the industry, and this is the 5th quarter in a row that we have outpaced the industry growth by a significant margin, obviously we are gaining some market share. As far as the new incumbent of Birla is concerned, so far, at least we have seen zero impact on our sales with the entry of the new incumbent. And that has not come as a surprise to us. We have been saying that regularly, that irrespective of how they execute and how they ramp up, it will be a very long time before they start impacting the top line or the bottom line of any of the existing players. So we're not too worried about that at this point in time.
3% is where you are in the market share, or a little more or less than that?
Around that much, around that.
And in the next 3 years, where is it headed?
That's a very difficult forecast to make.
There's an aspiration, sir. You can give us your aspiration.
We can inch up to around 5% in the next few years. That would be an ambitious target and possibly achievable too.
We appreciate you joining in and filling us in with that guidance, sir. We wish you all the best, and we look forward to having a chat with you at the end of the coming quarter as well. Thanks a lot for joining in.
Thank you.